Yo, we're live. No camera today. I'm feeling ugly. Let's get it all pulled up. Oh.
sports, but roll down a little bit more. So like the process. There's a chapter in this book called The Process, in chapter 7, and just read that. The process is many things. Most importantly, though, the daily way of living. Sound familiar? It focuses on completing the task ahead of you at the moment and not worrying about the cue on the macro show or what happened yesterday to your biggest loser. It didn't say that part, but it did. You can't worry about what anyone else is doing. If it's good enough for him, it's good enough for me. That works. That's really familiar. Okay? And I hope you really appreciate that, because you can go listen to Bozo the Clown or some high school ranked coach, talk about football and all they know in their glory days playing nowhere. Or you can listen to Nick Saban. I know who I'm going to listen to if I'm trying to learn something. Obviously, keep going, and that's not a hit on you high school coaches out there. A lot of you are really good. You're just not as good as Nick Saban. Keep going. What else we got? We got Asia last night buying opportunity, maybe here in Japan. After having, so what you'll also note in that rebrand is that on Monday I sold a bunch of Japan and India. Those two big asset allocations came down. So our correction was kind of minor today. India's down like 0.2%, Japan down 0.5%, and we'll see what the ETFs do. I buy more of that. I'll sell some energy today. I'll buy more of that. It's cool. Just think of it like inventory. I write about this all the time in real-time alerts, coaching alerts. And that's a much better tool than it's ever been, because I talk about these very obvious things to me that are not obvious to many of you. And it's becoming more obvious to a lot of you. I got that. And it's what I get even from some of the best pros in the game. They learn from me, and I learn from them, right? So this is important to think of your positions as pieces of inventory. These aren't humans. This isn't Nick Saban trying to inspire Johnny to do this and Jack to do that, right? That's not what this is about, because there's a lot of behavioral influence there. This is being completely like an assassin. You don't care what position does what or what size it is. You do what the positions are doing, okay? You buy on red, you sell on green, you have 28 different things you can do. It's great. If it wasn't, I wouldn't be going to the Bahamas this afternoon, okay? What else do we got going on for you this morning? We got the Kospi critical bounce. Now, this is a critical bounce because it was right at the threshold. Now, if I were to ask myself one question that is obviously not in the view, because it'll be about something like silver, because it's down, it's going to be about South Korea. Why did you sell some South Korea? Because it was red on the day. Because it was approaching the threshold. The threshold. You know what that is? Trade, trend, tail lines are thresholds. If they break, that's bad. It got very close to the trend. I'm like, okay, this U.S. setup's getting pretty gnarly. Why would they break down South Korea? There's some AI components to that index. So I sold some on red. That's an infrequent thing that happens. I don't sell India. I don't sell Japan on red. Why? They have A, stronger signal strength, and B, are nowhere close to breaking the threshold or breaking trend. So write it down. The trade line, it just got about it. The trade line is actually as important today because South Korea had a big bounce off the low end of the range, which was right around the trend. And trade momentum is 25.99. So if you can hold about 25.99, and the CPI is priced in, we're going to make money staying long South Korea. I'm not going to buy it today because it's up a bunch, but again, I sold some, and that's an infrequent thing to do because, again, I'm protecting the house. Rule number 1, never forget, don't lose money. I don't have to stand there for South Korea and wave a flag like I'm going to stand here for sure and buy everything South Korean. No, I'll sell some of anything, okay? That's what I did there, just so that you know. That's a little move inside of move. Hong Kong was oversold yesterday, EWH was, so I covered some of that. That's covered towards my minimum, but Hong Kong was for short. Of course, it is. IDF, Indonesia, was up a little bit last night. Well, big opportunity really to reload on the short side of Europe. Those were all down yesterday, so you should. Those things are down 2. In some cases, some of them were down 2%. If you're not covering some on shorts that are down 2%, index shorts, ETF shorts, you probably shouldn't do this. Okay? You should go do something else, or just do long. And I get it. If you are in the business of shorting and holding, you're going to learn. Well, you're going to get one of the greatest educations ever, which is losing all your money. Okay? So that's going to be something really important. Lose your job, lose your money. I'd say that those are 2 good educations that I wouldn't want on everyone, but for some certain types like me, when GDP was 2% in Q3 of 2007, I got fired. Because I thought there was going to be a nasty recession. Yeah. I want to be fired for that. I don't want to work. they bought the bottom in SPYs. Like they weren't long it the whole way down. From January to June of 2022, they're all magically all long it from October. Well, why does anybody talk about doing that in oil? Well, I didn't do that in oil because that's not how the process works. I had to wait to see the trade break out and then that bet on it. I'll be pleasantly a little late. That's the point. But if you owned it at the bottom, like everybody owns SPYs, but didn't own on the quick now, yeah, you'd be up from 67 to obviously 83.5. That's 24.6%. I even wrote that down this morning because I write down all of them. What else we got going on for this morning? Orange juice is down, corn's up, whatever. Corn and copper are very much bearish trends in as much as gold's still bullish trend. It would have to, trends towards well below where it was. But silver went to neutral today because its trend is like literally right where the price is. So I just put it in. Now you'll also note that it's gold miners are out of the asset allocation model, and gold junior miners were up before that. Those were good ups. And silver got taken all the way down. Again, real time alerts sold them, made money on them, and then I got it all the way down to 1%, which is my minimum position. Because it's the weakest position. Sometimes they get sold on down because I go big in them. So again, if you show that SLT, you can see that healthcare got sold down big, and I was aggressive with it just because I wanted to be. And some days I just wanted to do that. And as you can see, like silver's at the bottom because it's weak. You don't put your weakest signals at the top. A lot of people screw that up, including me. I just buy losers and sell winners. That's not how to do it. You gotta really, and what you'll notice in the Macro Pro subscription is that something keeps moving down the list and then it gets yard sale, it gets out. Like XLG, large cap out. It was moving down, out. That's the way that it goes. Whereas a prior me would have been buying all my losers, which could lose more, and selling my winners, which could keep me in the game. That's a very typical mistake. I've made every mistake you can make. I've made it very public. Okay, what else we got going on for you this morning? Already hit on the bond yield. Bitcoin, look at that. Neutral. Holy hell. Now, it's at the top end of the range, so I'm definitely not buying, well, I won't buy mostly anything at the top end of the range. And it's shitcoin. But I will start calling Bitcoin if it can hold trend. And by the way, that's a very tenuous trend. 29,901 is now trend for Bitcoin. So you can see that FIDO, the equivalent trend line for BITO, which is published daily in the crypto tracker, is 1540, 15.40. So that says neutral as well. I'll give it some time, let it breathe, see how it goes throughout the CPI, and then we'll see. Quad 3, it's the quad where you can be long crypto. Bitcoin would be the preferred because it's not like crypto. Something to think about.
Okay. Well,
Is that right? Silver at the top.
you're spot on. Gold and silver. It was a double question about gold and silver. First question, most of them. And for those of you that know, Keith doesn't have the Q pulled up, so you're literally calling it just off of knowing that this is what's going to get.
It occurs, right? I want to be better, right? Like these guys, like let's look at some books that I've cited. You want to get to the top, okay, that's a goal. Getting down is mandatory. You want to be like Nick Saban a bit. Like I want to level you guys up. If I can predict bad behavior, so many of you don't. Like it says we've reduced this to probably 5% of people. Really coagulate around the whining. But what is the question on gold? That's actually an important question because I have an answer that I'll give anyway.
Well, Tyler's asking, in your estimation, what would be the catalyst for gold and silver to finally break out?
Well, finally break out. If we're old enough to remember, it's Scott Anderson. Did he ask that?
No, Tyler. Just says Tyler.
Yeah, I didn't think it was Todd. Todd's a smart guy that obviously has a memory that goes back. I'm old enough to remember the month of April of this year and May, where gold got towards all-time highs. That was like a pretty big breakout that we were on the right side of. We owned it. I own it right around 1,700. Tell me, don't stare at cost base. Very bad thing to do. But again, we've been long it since the 1700s. It broke out multiple times. For it to break out on your very short-term duration, as you said, Tyler, because that's what a lot of these few questions have to do. Like, why is it doing this? Like it's like
highlight kind of everything you've just been saying, right? Energy, commodities, healthcare. We've already been touching on. We've been doing our theme decks on these kind of things. So.
Along the mother of all rotations, which is a two-way way. You just got your ass handed to you the first part of August. I mean, you just got first. They don't have drawdowns, so that I can compound that capital. It is I suppose it's a foreign concept to many that have no alternative. But we built that donation here so that you have a go anywhere strategy, of course, as opposed to just.
All right, we're getting ready for the open.
No. I had Scooby-Doo. I did at least grow up with that. I'm a 97 baby.
You got it. But first on energy, I mean, he is from Texas, so that's why we call him Texas. I mean, energy, people in Texas have to be quite happy about this if they're long of energy. Now, of course, the people at large are going to get pounded by this. This is a major cost of living input, especially people that are on a budget. Paycheck, 50% of Taylor Fernand's generation. Okay. So think about that. It's actually 70 millennials and Gen Z, if you include Gen Z or homelanders. It's 70 paycheck to paycheck, with 50% of them depending on their parents who are living with them. So again, I think Tex is quite happy to not be living with his parents right now. He's living with his dog and I think his girlfriend too. So there you have it. In Texas, energy is going to get the energy bulls paid. Energy was something that we bought the damn dip on yesterday in Macro Pro. You saw that, of course. If you didn't, it doesn't mean it didn't happen. But again, we have 8 energy positions that I characterize as being indexed to some degree or outright in the case of being long gasoline, which is UGA, which had a nice intraday move yesterday after buying some earlier on the open. So this stuff kind of lifted, not kind of, it actually lifted throughout the day, and it should, because that's the number one incremental asset allocation we've had. So Brazil, of course, is an energy index, so to speak, with its heavyweight to Petrobras. So again, lots of things in there. You see that INFL, for example, is relatively new, and so are small cap energy stocks. But again, I bought
Getting ready to roll.
Some on green days today. If anything, you would sell some if you're trading them actively. So that's that. Interest rates number 2, no change. Okay, so that's a real important signal this morning. Whether I'm looking at the 2-year yield, which is Fed policy proxy, or I'm looking at the 10-year yield, what you see are big higher lows. 388, for example, on the 10-year yield is the low end of the range now. The top end of the range still back towards the cycle highs, not right at 425, but at 421. So what that says to me is that, number one, inflation did accelerate. 2, the bond market's trading that and pricing that inappropriately. And number 3, you might not get a huge move born out of that, because in my risk range on the S&P 500, after, don't forget that the last 6 trading days, 5 of the last 6 have been down. Okay? So again, that's not good if you're long the whole way down. Now, the Russell 2000 is, which I'll get into in a second, is down more than the S&P 500 over that time span. What's going on with this voice? Hey, come on. Anyway, voice is a thing. But what it is telling me is that part of this on inflation accelerating got priced in, right? It got priced into our longs, the long energy. It got priced into our shorts, our cyclical shorts went down. And point number 3 is just that. The Russell 2000 is down 3%, essentially from where it got marked up into an epic month-end markup, which is, of course, the month-end markup of July. Now, June and July, if you go back to that slide 28 that I was showing you yesterday, had Moab in it. Big
real.
You had call buying like America or the world has never seen. That was mid-June. Flowed all the way through July. And then volatility flipped. So again, the Russell 2000 has moved back into crash mode. That's down 20% or more from its cycle peak, down 20.3%. If you're down 20 in something, you gotta be up 25 to get back to break even. So again, that's what it is. Some guy on Twitter today is like, well, I don't know why you're focusing. I focus on what I am involved in. That's what I focus on, okay? I don't go focus on my neighbor's kid. I focus on my kids, okay? I don't go focus on Taylor Burnett's dog. I focus on my
Hell
kids,
yeah.
okay?
Taking some profit on Real.
The Russell 2000 has been consistent.
Up 10%. Beautiful.
Until we most recently had spies right on the screws at the beginning of the month, our only index short position. So this matters to me. I covered it down towards my minimum, by the way, because in the last 2 days it got towards not at the low end of the range, and we got people trying to price in that CPI event. So again, it's what it is. If you executed on that way, you did. If you didn't, you didn't. On a rally towards the top end of the range, which would be about 1.5%
DBB.
from here on the Russell, or 1.10 on the S&P 500, which is less, I would short both. Okay, those are your top three things. Timestamp your positions. Have positions. I know you do, right? I don't know if all of you would show your book open like I do every single day, but it's fine. I'm good with it. It takes a crazy Canadian with a relatively low SAT score to do it, and I did it. Right? For 15 years into it, I have around 8,000 timestamped closed positions, wins, losses, glory, and disasters. They're all there in real-time alerts. And now, today, for the first time, I published in the early look my when I allude to the 28 asset allocations, really it's 27, because the 28th was this SQQQ position that I slip in there sometimes. John Castillo, one of our great clients, always says, I love it when you sneak that in there. Eh? But yeah, I did, and it worked, and I covered a whole bunch of it. Covered right down my minimum, so that's there too. You can see that today in the early look. They're re-ranked. Again, all institutional subscribers, Macro Pro subscribers get that every day.
CrowdStrike about to go green.
To launch like visualizations on this, different durations, so you get it like weekly.
CrowdStrike green.
Want to pay for, but obviously if you're going to pay for it daily, you're going to get it daily. I think that, and the feedback was what I thought it was. It's kind of eye-opening to see like
CrowdStrike red.
And so many of them. Again, 8 relatively obvious energy positions, for example, 4 Japanese positions, 2 India positions. They're all there. Okay. My task isn't not knowing they're there. You know, but believe me, when I talk about my kids, they know they're there. What do you think Dad does every day, twice a day? Trades the open, trades the close. That's how we make money, okay? That's how we survive. That's how I built Agile. I didn't get paid for the first 3 years at Agile. All I did was pay the bills, right? I had to trade to make money. I had to risk manage my pile to make money. So you can see my pile now. You can see it right there. It's sitting right there. Doesn't mean it's always right. But I think the right thing to do is to show it every single day. And I don't think anybody else has the process or the courage or the character to do it. Okay? Let's go. We got a lot going on here this morning. We got, like I said, an S&P 500 risk range. It's a pretty fair fight. So you saw me take a bunch of my positions off. Like literally, I have 4 positions in real-time alerts right now, 1 long and 3 shorts. Net short position is down to minus 1.7%. The goal would be, it's really not the target net, but I could see myself on a rally towards the flip line if it fails there. For the S&P, from a gamma perspective, that is, you can see that on alpha, that's at 45.36. If it fails there, which is, by the way, and not ironically, just inside of the top end of the range, which I have at 45.42, there's only like 1% of upside, but I could see myself being 3, 4, 5, 7% net short. Probably not 25% net short, but we'll have to see. Because, I want to spend some time with my kids the next couple days, which are market days. But again, I've left the beach many times to go trade my own book. Yeah. Living with Dad. What else we got other than the fair fight and the risk range there? But we got the VIX with another higher low. 1429 is the higher low in the risk range there. 1793 is the highest level we've had for the top end of the risk range of the VIX. So again, that keeps you again in a very cautious crouch. And again, if you do go down 1.2% from here, or 1.5%, let's say the market opens up 0.2 or 0.3%, nobody should be surprised because that's where the low end of the range is. But don't forget the dynamics of gamma that we've been talking about. On a 1 to 2% drop, all control funds are going to be selling, CTAs are going to be selling, so it could go down faster and feed on itself. A VIX 19, 20, 21 is materially different than a VIX in my model that I'm using today, which is 1793. Okay? As the vol changes, as the price and volume dynamics change, I change. So that's all I do. It's just math, just hitting the buttons. I don't argue with it. I just execute on it. And I hope you do too. Russell or NASVOL, they're both over 21 already, by the way, which you saw obviously yesterday. But again, over 21. And for example, the Russell volatility vol range is like 18 to 22, 18 to 22 and a half-ish. So that's what it is. So I cover some there. If the Russell volatility got down towards 18, that would mean that the Russell is closer to 1975, 1976, and you go back and you get a real-time alert on reshorting the Russell because it's at the top end of the range. We're at to seek perfection, of course. It was a really good day yesterday. I mean, of course, yesterday on the volume side, you had volume up, stocks down, and of course, people had inside information. The big dogs, the establishment, the elite. They knew that the Italians were going to come out this morning and say, look, why don't we just pull back that? We're going to such a shit show yesterday. We'll just do a little less for you, eh? So that's what happens. So Europe rallied, obviously big time on the open here. There's a lot to do there on the short side. Just deal with it. People always have insider information. They don't get apprehended for it. They don't get prosecuted for it. I don't get it because I don't want to go to jail. I can tell you one thing. If I had one iota of inside information, Wall Street would put me behind jail for life. I mean, they don't want me anywhere near you. They don't want anything to do, and never had wanted anything to do with Hedge Eye. Why do you think CNBC, Bloomberg, Fox, why do you think all of them? That's the only thing these partisan media networks have in common. They blackball Hedge Eye. You love that. What a compliment that is, isn't it, Tex? I gotta love that. It's just like one of the great achievements of my life, or of our lives, as a team. Looking at the sectors, it was a good day. Financials, one of my big shorts that I grossed up when it was up, of course. Now it's closer to its minimum because it was near the low end of the range. KRE was as well. I still have that on real-time alerts because I screwed up the timing finally. But it doesn't mean I don't trade around it like a bandit. But again, I was covering some KRE, some XLF. I didn't show those positions, obviously, in Macro Pro, because Macro Pro is a long-only asset allocation. XLB, which were long, which we built that position up. You can see the arrow. Had a hell of a day. So what you'll see in the Macro Pro, actually, if you could show itself in the early look, why don't we just show it? Because some people don't subscribe to the
Super Micro is down almost 17%.
At least a couple drawers of it. I mean, it's really important, okay? Macro shows, of course, big drawers in the toolbox. And then there are tools, the wrist range product, the real-time alerts, et cetera. But if you look inside there, I think you're going to like what you see. And you can see, just scroll down there to the positions, if you could. This is pretty cool. Keep going. There you go. See? So you got my biggest position there is my FDRXX. This is a Fidelity account where I have the MoFo, of course, physical gold, then EMX China. That might surprise you, right? That's number 3. I'm pleasantly not surprised or surprised. Positions go up or down based on opportunities. In the morning, for example, CTA, managed futures, hit the low end of my range, so I bought 100 basis points. You saw that in real-time alerts. It moved all the way up the list. As healthcare, keep scrolling down, you can see healthcare moved all the way down to the bottom of the list. I mean, that's okay.
Trimming some more real.
Healthcare or nuclear energy in what rank order? I don't care. I mean, I just do what it does, and it's a much better way. I've tried every other one. This is better. This is a better way, and hopefully many of you are practicing, before you do it with live ammo. But realizing that having a go anywhere strategy where you can dynamically rebalance intraday, paying no commissions. This is all new, right? This is all new with modern technology, and obviously the commission side is great. And you can push it all now into a high yielding savings account that gives you 5% at the end of the month. Yeah, so I like it. I like it a lot. Right? Okay, keep going. What else we got going on here? Move Index 118, high yield. This is where you should be grossing up your high yield and junk shorts again. We've only done that how many times for 20 months? And we have been bearish on growth for 20 months. We had a quarter or two wrong on government spending, whatever. So it's fine. On to the next play. We talked about that this morning in the early look note as well. If you go to that top part of the early look note as well, one more time here, Celts. And it's a day off for Gendron, by the way. So Celts just shows you how deep our bench is and how good our team's getting. We got players that can play every position that need to be played. We got backups. We got supports. But roll down a little bit more. So look, the process. There's a chapter in this book called The Process. It's chapter 7. And just read that. The process is many things. Most importantly, though, the daily way of living. Sound familiar? It focuses on completing the task at the moment and not worrying about the cue on the macro show or what happened yesterday to your biggest loser. It didn't say that part, but it did. You can't worry about what anyone else is doing. If it's good enough for him, it's good enough for me. That works. That's really familiar. Okay? And I hope you really appreciate that, because you can go listen to Bozo the Clown or some high school ranked coach, talk about football and all they know in their glory days playing nowhere. Or you can listen to Nick Saban. I know who I'm going to listen to if I'm trying to learn something. Obviously, keep going, and that's not a hit on you high school coaches out there. A lot of you are really good. You're just not as good as Nick Saban. Keep going. What else we got? We got Asia last night buying opportunity, maybe here in Japan. After having, so what you'll also note in that re-rank is that on Monday I sold a bunch of Japan and India. Those two big asset allocations came down. So on a correction, which is kind of minor today, India's down like 0.2%, Japan down 0.5%, and we'll see what the ETFs do. I buy more of that. I'll sell some energy today. I'll buy more of that. It's cool. Just think of it like inventory. I write about this all the time in real-time orders, coaching orders. And that's a much better tool than it's ever been because I talk about these very obvious things to me that are not obvious to many of you. And it's becoming more obvious to a lot of you. I got that. And it's what I get even from some of the best pros in the game, they learn from me, and I learn from them, right? So this is important to think of your positions as pieces of inventory. These aren't humans. This isn't Nick Saban trying to inspire Johnny to do this and Jack to do that, right? That's not what this is about because there's a lot of behavioral influence there. This is being completely like an assassin. You don't care what position does what or what size it is. You do what the positions are doing, okay? You buy on red, you sell on green, you have 28 different things you can do. It's great. If it wasn't, I wouldn't be going to the Bahamas this afternoon, okay? What else do we got going on for you this morning? We got the Kospi critical bounce. Now, this is a critical bounce because it was right at the threshold. Now, if I were to ask myself one question that is obviously not in the queue, because it'll be about something like silver, because it's down, it's going to be about South Korea. Why did you sell some South Korea? Because it was red on the day. Because it was approaching the threshold. The threshold. You know what that is? Trade trend tail lines are thresholds. If they break, that's bad. It got very close to the trend. I'm like, okay, this U.S. setup's getting pretty gnarly. Why would they break down South Korea? There's some AI components to that index. So I sold some on red. That's an infrequent thing that happens. I don't sell India. I don't sell Japan on red. Why? They have A, stronger signal strength, and B, are nowhere close to breaking the threshold or breaking trend. So write it down. The trade line, it just got above it. The trade line's actually as important today because South Korea had a big bounce off the low end of the range.
Staying short Tesla here.
Trade momentum is $25.99. So if you can hold about $25.99,
DraftKings, Donkey Kong.
Priced in, we're going to make money staying long South Korea. I'm not going to buy it today because it's up a bunch, but again, I sold some.
Missed it.
It's an infrequent thing to do because again, I'm protecting the house. Rule number one, never forget, don't lose money. I don't have to stand there for South Korea and wave a flag like I'm going to stand here for sure and buy everything South Korean. No, I'll sell some of anything, okay? So that's what I did there, just so that you know. It's a little move inside of the move. Hong Kong was oversold yesterday, EWH was, so I covered some of that. That's covered towards my minimum, but again, Hong Kong is the short. On the long side, we've also added, of course, in addition to India, we have IDX, which is Indonesia, was up a little bit last night as well. Big opportunity really to reload on the short side of Europe. Those were all getting pounded yesterday, so you should be covering some. You know, and those things are down 2, in some cases, some of them were down 2%. If you're not covering some on shorts that are down 2%, index shorts, ETF shorts, you probably shouldn't do this, okay? You should go do something else, or just do longs. And I get it. If you are in the business of shorting and holding, you're going to learn, well, you're going to get one of the greatest educations ever, which is losing all your money. Okay, so that's going to be something really important. Lose your job, lose your money. I'd say that those are two good educations that I wouldn't want on everyone, but for some certain types like me, when GDP was 2% in Q3 of 2007, I got fired because I thought there was going to be a nasty recession. Yeah, I want to be fired for that. I don't want to work with people.
Man, I don't have any milk.
Partner with people that were on
Nvidia, interesting.
by October of the next
And
year.
Supermicro, interesting.
Nope. Not going to be my life. Can't pay me a one extra dollar to do that. You can't pay me $1 billion to do it. Never. I'll be here for life, whether you like it or not. Whether you like it or not.
I'll buy a little Supermicro here, 20% down.
Well, we got the 7902 is big higher low. That's again oil. That's this thing. Look at this thing. This thing's up almost 25%. Like, why be a spy monkey? If you could have been, you know how everybody says they bought the bottom in spies, like they weren't long it the whole way down from January to June of 2022. They're all magically all long it from October. Well,
Maybe I won't.
why doesn't anybody talk about doing that in oil? Well, I didn't do that in oil because that's not how the process works. I had to wait to see the trade break up, and then I bought it. I'll be pleasantly a little late, is the point. But if you owned it at the bottom, like everybody owns spies, but didn't own it on the way down, yeah, you'd be up from 67 to obviously to 83.5. That's 24.6%. I even wrote that down this morning because I write down all these things. What else we got going on for you this morning? Orange juice is down, corn's up. whatever. Corn and copper are very much bearish trends in as much as gold's still bullish trend. It would have to, it's trend support's well below where
All
it
right,
was.
I'll just
But
buy
silver might be
Nvidia.
neutral
Everything else is
because
like
its trend is
too
like literally
sketch.
right where the price is. So I just put it there. Now you'll also note that it's gold miners are out of the asset allocation model, and gold junior miners were up before that. Those were good ups. And silver got taken all the way down. Again, real time alerts sold them, made money on them, and then I got it all the way down to a 1%, which is my minimum position. Because it's the weakest position. Sometimes they get sold off down because I go big in them. So again, if you show that SLT, you can see that healthcare got sold down because I went big and I was aggressive with it just because I wanted to be. And some days I just wanted to do that. And as you can see, like silver's at the bottom because it's weak. You don't put your weakest signals at the top. A lot of people screw that up, including me. I used to. I just buy losers and sell winners. That's not how you do it. You got to really, and what you'll notice in the Macro Pro subscription is that something keeps moving down the list and then it gets yard sale. It gets out. Like XLG, large cap growth, out. It was moving down, out. That's the way that it goes. Whereas a prior me would have been buying all my losers, which could lose more, and selling my winners, which can keep me in the game. That's a very typical mistake. I've made every mistake you can make, and I've made it very publicly. Okay, what else we got going on for you this morning? Already did the bond yield. Bitcoin, look at that. Neutral. Holy hell. Now, it's at the top end of the range, so I'm definitely not buying, well, I won't buy mostly anything at the top end of the range. And it's shitcoin. So, but I will start calling it Bitcoin if it can hold trend. And by the way, that's a very tenuous trend. 29.
Oh, XLK just went bearish. Holy shit. We're here, aren't we? Fuck. Yes.
So that says neutral as well. I'll give it some time, let it breathe, see how it goes throughout the CPI. And then we'll see. Quad 3, it's the quad where you can be long in crypto. Bitcoin would be the preferred because it's not like crypto. Something to think about. Let's take some questions.
Okay. Well, let's.
Is that right? Was silver at the top?
You were spot on. Gold and silver. It was a double question about gold and silver. First question, most of them, yeah. And for those who don't know, Keith doesn't have the queue pulled up, so you're literally calling it just off of knowing that this is what's going to get.
It encourages me, right? Like I want to be better, right? Like these guys, let's look at some books that I've cited. Now, you want to get to the top, okay, that's a goal. Getting down is mandatory. You want to be like Nick Saban, okay. Like I want to level you guys up. If I can predict bad behaviors because I know what it is, and many of it have. Many of you don't, I should say this. We've reduced this to probably 5% of people, really coagulate around the whining. But what is the question on gold? That's actually an important question because I have an answer that I'll give anyway.
Well, Tyler's asking, in your estimation, what would be the catalyst for gold and silver to finally break out?
Well, finally break out. We're old enough to remember. Is it Todd Anders? Did he ask that?
No, Tyler. Just says Tyler.
Yeah, I didn't think it was Todd. Todd's a smart guy that obviously has a memory that goes back. I'm old enough to remember the month of April of this year and May, where gold got towards all-time highs. That was like a pretty big breakout that we were on the right side of. Because I own it right around 1,700. It's not my cost basis anymore because I trade around it. Don't stare at cost basis; very bad thing to do. But again, we've been long it since the 1700s. It broke out multiple times. For it to break out on your very short-term duration, I think is what Tyler's asking, because that's what a lot of these Q questions have to do with, like, why is it doing this today? One, it would have to get above trade resistance, so it's below medium-term trade resistance, which is why I cut the position in half twice, so I'm down to 2% on paper gold or GLD. You'd have to get gold above 1966 to get the medium-term trade breakout. So Tyler, get better, right, in terms of asking the questions, and then if you run a client business, family office, your own, whatever, at the golf club, explaining to people why what you do is so unique and is in the pursuit of excellence and alpha seeking, etc. So the question would be, hey, I see that you've cut your gold position down. Nice call, because I like to be complimented, Tyler. I really need it. I saw that you cut your position down ahead of the CPI. I see that there's a very high dollar correlation this morning of 0.91. So what would you really need to see to start buying more of it? And what is the level of an immediate term trade breakup that we would look for? So the answer to that is 1966. The other part of it is to get through the CPI. So this again, if the CPI equates to dollar up, rates up, that's gold down. If you don't know that about gold, Tyler, if gold goes down with the dollar and rates up at the same time, you need to get a lot better at this, right? Because that is like the fundamental setup for gold to correct. Now, gold at the low end of its range, with the CPI having been reported and the dollar at the top end of its range, would be also the starting point to get you on a path towards a 1966 breakup, the level of gold. So that's the way that I would have asked it. That's the right answer to the question. Like I said, I was going to give you the answer that I had no matter what the question.
Love it. The next one, and it could be a newer subscriber since we've talked about it, we've been touching on it, but KJ's asking, is Moab flipping to MOAR, mother of all rotations, energy, commodities, healthcare, etc.? Thanks.
I don't know what the hell that is.
Yeah, I guess it's just trying to highlight kind of everything you've just been saying, right? Energy, commodities,
Whoa,
healthcare. We've already
life
been
stance.
talking
What the
about
hell?
We've been doing our themes decks on these kinds of things.
Top of the range to bottom of the range. Damn, I gotta dump that.
Wait, you just got your ass handed to you for the
The hell?
August. I mean, you just got rotated there, brother. The mother of all rotations just got rotated. Sit on it and rotate. Yeah, the Russell 2000, financials, KRE, all that stuff got squeezed. That's not rotation. That's called a chase, right? It's people that are basically saying to themselves, and this is a broadly held truth amongst the consensus, that, oh, we've already skirted the recession, you've got to buy the laggards because, when we start accelerating again, those will be the outperformers. That's what they own. That's
I am up 84 basis points today.
Whoa! Horsey. Just like, yeah, you're just like a dumbass, right? Like, you're not even a horse, you're like a donkey. Whoa, donkey. The recession is about to be reported the first month of or the first quarter of the two that go back-to-back recessions is in the fourth quarter. It's August. Holy shite. That's when you sell the fur. And if you sold the fur like I did, and accurately so, financials, industrials, real estate, and retailers, then you did great in the last week and a half. But we've been doing this for a while, right? It's not like these are new positions. The concept of, I won't even give it any more airtime on that acronym because you're stealing from me. The mother of all rotations. It's just a short-term move. It's not a trend.
Probably got time for one more that we can fit in. We've got, actually, you got the Canadian shirt on. We've got a Canadian asking a question. Wasim from Toronto, at a high level, he goes, we can't see the GDP nowcast for Canada, but what categories have Canada been entering in for Quad 1 in Q4, Quad 2 in Q1 is mostly oil. But it sounds like Wasim wants to know is what do you think the setup is for Canada moving forward, and are you thinking oil and energy is going to be the main driver there?
Well, Wasim, did we provide, guys? Did we provide the slide 20 from the model or from the slide deck in today's stat pack? Did we? You guys know that? Yeah, we provided that. Wasim, you do have the nowcast. I just want to make sure you got that. So right there, you can you see my cursor on here, by the way? Can you see that going across Canada?
Think so? I'm a little far from the TV, so I'm.
There it is. Well, anyway, you can see Canada's quad four, last quarter and this quarter. So you can see exactly what our forecasts are. Canada is about to come out of back-to-back quad four into the green. So Canada, I'm waiting for a signal to buy. Why would you buy Canada? Well, it's heavy on inflation. It's heavy on resources. So that's an interesting one. Don't forget that Canada was one of the first countries to essentially enter the recession. They got big problems right now with real estate. So that's that's an interesting one. EWC is ETF. I'm again waiting for that signal to buy the homeland. That would be I'm long Israel. I'm not long Canada. And those two things together have nothing to do with each other. They only have to do with themselves. So that's the way to think about it. A couple other things to call out that I haven't been asked about yet in the notebook. One, yesterday. High retail sentiment, like if you look at the bear baskets, high retail sentiment, in other words, what all the yo-yos own, it was down like almost 1.5%, which was down triple the beta, or down triple the S&P 500. That's breaking down hard. High growth software at one point was down 15% in 7 or 8 trading days to start the month. Off of them, right? So we're not getting it. We got the question that question on rotating. I mean, this is the real question you should ask yourself. Is tech and what everyone owns breaking down? And the answer to that question is an unequivocal yes. I mean, everyone owns Apple, everyone owns Microsoft. Those two things are both bearish trend. Tech this morning, XLK went to neutral because it is dancing right on the trend line. The trend of 168 for XLK is in play. So I put it at neutral in case it breaks tomorrow or by the end of the week. I'm not going to tell people that that's bullish here. It's not. It's breaking down. Broke immediate term trade support for XLK, which is 176, and trend is in play. And the two biggest components of the XLK are already broken. Again, Apple and Microsoft. So again, that's interesting. The long book against that, again, we don't have a short or a long position in tech. But like I said, the longs that I have on the sector side are energy, defense, and healthcare. But I'll trade around them aggressively. But I think that that's a real interesting setup. What a lot of people have said about the economic cycle is, okay, I can go buy growth and I can go buy cyclicals as well because we're not going to have a recession. Like, do yourself a favor. Just listen to or try to see, and just get Steiner to recap it on the call for you, what ZipRecruiter today said about the labor market. Things are collapsing, in rate of change terms. So again, the last thing to collapse will be labor. How I want you to be positioned, obviously, is to be short the consumer and real estate, into that as we go throughout it, or short the fur outright. So we have a real interesting setup where that's another thing people say. They'll often say, well, the labor market's great. No, it's not. I mean, let's flip quickly through slides. I think it's 48 through 51 in the current macro deck. Let's do that. I think those are the slide numbers. Just pop up the slide. Yeah, there we go. This is what's actually going on in the labor market, Taylor, which you know. I mean, sequencing this cycle, first you cut people's overtime hours. Anyone on this call or listening to the macro show that runs a business knows that that's what you do when business is booming, when you have some AI. No. It's when the revenues are slowing, your cost structure is starting to grab you. So you start to cut, again, overtime hours. Next thing.
AI.
Then you cut your temp staffing. See the last time it dropped into the red? You see that thing? When I saw it dropping into the red in May of 07? And then I got fired in November of 07 because there wasn't going to be a recession. What happened to that line after that? How about into the pandemic? Same thing. So we're in the red, okay? Next slide. So then you cut the temps, and then you begin to reduce the hours worked for everyone else. Okay, next one, next slide. Keep going. Come on. Then the job losses start to percolate, which I think is going to happen in the fourth quarter. By the time that gets through 300,000, it's over, right? Even Tom Lee will know that it's a recession. Here's a guy who never called any of them, right? I mean, he's the world's greatest economist according to CNBC because all he does is talk about stocks. You got a big advertising business, CNBC.
All right, I went long, super micro,
The one thing that I don't have
catching this falling knife.
again, is
What up?
these are real easy to see. Go one more slide. If you look at actually one more. If you look at what's actually happening here is the payroll capitulation. We're already there. Like when you look at jobs claims, that's one thing. But when you look at continuing claims, we're as high as we've been without having a recession. So you've never had a recession without this level. So I don't really play off never as a zero probability of it. Like this is happening. It's already happening. Look at what ZipRecruiter said. Watch what its stock does. And by the way, they've already been saying it. Robert Half said it. It's another one. RHI, for example. There's a lot going on out there that you don't hear and see because there's a huge conflict of interest by Wall Street, old Wall Street in particular. Like I said, they've always been conflicted, compromised, and constrained. You're not going to get the truth. We're trying our best to get it to you, fully loaded with, again, addressing things, truthfully, that didn't work for you for a day or for a week. What we're trying to do is get it right for your whole life, your full investing cycle, and understanding that we can bob, we can weave, we can stay with our positions, we can get rid of positions. But the real test of our mettle is whether or not we wake up every day not giving 2 iotas about what everyone else is doing and doing what our process is, again, telling us that we should be doing. That's what we need to do. That's what we need to focus on. When I'm not here tomorrow, I'll be here with you, still with the alerts. But again, you got to get there on your own. And when you get there, you're going to be in a much better place.
And that's awesome. And we can wrap it up there. Keith, enjoy some time off, even though we know you'll still be plugged in. Tomorrow will be David Salem, Director of Capital Allocation, and my buddy Ryan Ritchie in the studio tomorrow. With that, stay safe and good luck out there.
Yo. Super micro. Super micro. Bought that and Nvidia.
intelligence can generate ad creatives automatically. The program is called Ad Creative AI, and it helps
You ever try VXX, Josh? But yeah, back in the day, again, all of these different volatility vehicles that you could play. I used to trade the UVXY a lot. The UVXY used to be 3 times levered and it used to hit. So it's just like lately a lot of things have been weird. But I made a video. If you don't know about the move index, I'd watch the video. I got a little criteria you can follow. But like the move index, thankfully there's still some indicator that works in terms of volatility. That. Honestly, I feel bad for the bears nowadays, because like if you're just like a young kid getting bearish and shit, or like you've been watching the market like rally up and get bearish, that's why all these down moves suck. Because back in the day, dude, we had fucking UVXY would hit. It was triple levered, and like you were able to buy like 10-cent options and all. Bro, UVXY used to be great, and it used to be 3 times. That's it. So like if you were bearish for like a weekend in the hit, you got rewarded on those moves, but. Now I think it's like 1.51. It's not even like, you need that 3% hit, bro. Like nowadays it's like you get like 1 down day, 2 down day maybe, if it's not too serious. Back then though, you would just get bigger volatility and then the VIX would actually work. Boyle is bad for CPI, but again, CPI is a month delayed. And then they have such easy comps to go into, especially core. So, like I said yesterday on the watch list, there's a key thing we're looking for with what core does, but as long as it doesn't move more than 0.5%, it's just going to set the stage for the narrative. Now, albeit, all of a sudden everybody's talking as if tomorrow's important. I'll tell you that much. That came out of left field. People are saying it's important. I don't think it is, but we'll find out. But hopefully, just you see the scenario. Just look at the chart of core inflation, look at inflation, but unless that trajectory could dramatically change in one report, which I think would take 0.5%, then we're probably just going to kick it. Or I think, again, people might use it as an excuse to blow up or get a bid in. Like I'm saying, a lot of tension has been building. CPI is either going to be an excuse or not to utilize it, if that makes sense. Amazon wants to run. Yeah, I cut out of that. Well, we took a loss there. I got out of my BABA too. But again, we held BABA for a long time, and now just earnings are tomorrow morning. So just keep that in mind. That's why this is the pre-earnings day. I was mad it was up 2.5 in the morning. Celsius. I like this one, baby. I have no play, but this is very good. So SPY a little bit off the bottom. Li Auto on the high. T-Mobile. It's on the low. BFAM, CRS. NASDAQ down 0.3. SPY 0.11. Dow Jones 0.06. And Russell down 0.47. AMD bad news. Security vulnerability in Zen CPU. Is that what caused the first drop, or is this coming out now? You're extremely cool, dude. I love you, man. I feel like, honestly, you remind me of my girlfriend. Because, like, I told you, my girlfriend, I think she's a spy because she's so nice to me. But, like, lately, every, like, new viewer on Twitch, y'all have been way too nice. This doesn't remind me of Twitch. Like, aren't you guys supposed to call me, like, a noob? And then, like, bully me for something? Like, I use a controller. I don't like PC gaming. Is that enough? Did I get you yet? No? Because this is weird. You're like the 5th new Chad who was like on Twitch who's like been like nice, and I'm not used to that. So I'm like, this is suspicious. Yeah, PC Master Race. I told you. I said I know how to. I know, bro. I love controllers, bro. It's so bad. I use controller on PC. You're a real man. That's all I'm saying. I feel you. Hey man. Hey man, wow, it's good to not feel alone. To be honest with you, Josh, you're a noob. You already have a badge. Oh, just the new guys, bro. The new guys on Twitch are extremely nice, and I'm loving it. So we gotta hook him up. I got loose. We gotta get you a law term. We gotta get you a law term. Make me bad and it's ripping up. On who? How about me? I am nice. No. I think I was gonna ban you the other day, and then I realized who you were on the YouTube, and I was just like, he's just doing his thing. Then I realized it wasn't like nefarious activity. I think you were just doing your YouTube trend in there, so I was like, alright, work. I think you can transfer shares into an IRA, yeah. But once they go in, what did I do? Like, I barely say anything in here. Like that last message. Ban, trading fraternity, ban it. And then that's why I was like, oh, it's the YouTube ban guy. So that's why I didn't ban you. That's why I was like, oh. But don't play that game with me. You guys always do that. You guys always be like, what did I do? I didn't do nothing, dude. Oh my gosh, Josh. Why did you like, bro? You were like calling for someone's head on your last interaction in here, and it's in the rules. It says it in the rules. It says if you call for someone's ban, you will get banned. It says that in writing. So I don't know. That's why you gotta police your own. Oh, sorry. I remember. You remember now. That's good. That's good. Either way, I love you, bro. That was the moral of the story. No matter what. You just asked me, but the moral of the story was I love you. What do you mean? Like the rule? I think we made the rule like in 2020 because like people get mad. They're like, ban this person, and like I just don't like snitches. So even if the person was wrong, so you shouldn't call for anybody to get banned, and then that's it. Because it's like you try to bring the attention. Sometimes you bring it upon yourself. It's a good lesson. It's a good lesson. You went down the whole bush. Isn't it good though? Like I didn't get to watch all of it, but it's a different era, bro. It's a different era. It's crazy. I love you, Javier Mota, my man. What do you think about doing the long term with options? It's just not gonna work. That's it. Will you hit a couple? Fuck it, bro. I'm telling you, if you took any of our long term plays like Redfin and Meta and did option, like dude, Meta, you would have done $2,000 into $200,000 if you bought a leap the same day we bought those shares. That's few and far between. But what I'm trying to tell you is that just it's not like straight up. The long term will give you success. That's it. Owning assets will make you richer. The long term we have provided. It's a great model portfolio. If you do any little better than we could have with it, you're gonna do amazing. But it's just like options are great for speculation and supplementing. But your long term is you really need to get that down with owning things. That's it. Like I'm saying, options is nothing is guaranteed. Do you guys get that? Up and down, but that's it. Like again, I can't ever guarantee anything. Anybody who ever guarantees you anything is a fucking scam. But it's just very simple. Go look at the long term. That I don't want to guarantee it, but it's like I know that will give you something very well. So far anybody who has encountered it, nobody has wound up negative off of a long term in the sense of like you may be like, oh, I lost on one or two plays. It's like, no, look at what you have. Look at where you're at. You have things that you will never be able to get at certain prices. And now, too, after 3 years, if I took a sample of traders and said, hey, do you have the same amount of money you had last year, 2 years, 3 years ago, they wouldn't say yes. So it's like just the long term is great. So you could try a long term with options. There's no success with that. You know what I'm saying? But at the same time, it's like long term, then supplement, add on a little budget with options. I think you'll be good. %50% is 5 for LT. You can, yeah. up to you. But just again, I mean, I think right now we're talking about owning assets versus owning options. But just like become an asset owner. I mean, this is something. It's honestly a prerequisite to really being in the cult for a long time. Because I just tell you, you're not gonna like me. That's it. You're gonna love me if you listen. If you own assets, if from the time you meet me and you start just owning whatever assets you can, and then you continue to know me through that time, and we continue this journey, we're gonna be great friends. You're gonna love me. If not, what Josh, all I could give you is like fucking news and plays that are, again, it's gonna be 50-50. You're gonna hate me. I mean, you're gonna love me one week, hate me the next. So just like the long term, it's gonna make success stories. It already has. So it's just like you got to become an owner. You got to become an owner. Some capital don't have enough to buy 100 shares. I know they don't. That's why trading is rich people activity. That's all I'm saying. That's it. It's gambling and it's fuckery. That's why I have a speculation account. That's what I'm doing. But the long term, I have long terms. I started with $200, buying one share, half a share at a time. That have turned into $15,000-$16,000. Just off, again, took 3 years, but still little by little. And that's where I'm saying I could guarantee that you'll at least have some money rather than losing it when it comes to becoming an owner with the long term. And then do whatever you want with options and trading and all that. VKTX pop. Oh, a little bit. Yeah, going. Little deposits weekly. It adds up fast, dude. I'm telling you. Like, it feels super slow, but again, just before you know it, you're gonna be like, oh. Yeah, Lyft is going up, so we're kind of back to break even. No, not really. Got 20 more cents. I'm in 11.45. Your case says it's worth 28, but when I try to sell it, only gives you 8. Check the bid. It's probably showing 28 as the midpoint. Downgrade banks for next run. That's literally what happened yesterday. Like, you know that's literally what happened, right? My favorite dividend stock. I like Abivi. I mean, one name. Oh, we got some reds here. Hold on. Spy, decent sized Chicle. Oh shit, my scanner wasn't to the top. Little Chicle at the low. I'm guessing that you get it now. So the bid is probably low, and then the ask. So whatever it's worth is the bid. The ask is probably like triple, quadruple the price. Yeah. So you gotta find the middle. You can work your way down. Just put in orders until you cancel. But it's like put in like 40, 30, 20. Like go work your way down. But if it doesn't get filled, you'll eventually get hit at the bid. Pulling back to the lows of 2022. I mean, eventually, but as far as how or when that's going to happen, I mean, I'm making it very clear. I don't think the market is going to shift until Powell, in the language of central banks and governments around the world, shift. It's a very, very hot take, but it's also very macro. Again, I'm looking at governments and I'm looking at Powell. Everything else is fuckery.
Dollar down, VIX down.
But that's the way I'm looking at it. So I do think we can go lower, and I don't think we should be this high. Again, I do own a lot of assets, so it's not like I was fighting this too much, although I did lose big on a short. But what I am saying is that I don't think this pattern of going up and not reacting to shit and feeling good, like I said yesterday, people like what's in the water. Like they're not going to get out until the temperature has to get really hot or really cold for people to jump out of the pool. And I don't think that's going to happen until Powell changes the language or governments around the world, the central banks start to change as well. That may sound weird to you, but I hope you paid attention to even the last couple of days. You're getting surprises from governments all around. The ECB sounds just like the damn Fed, and the Fed borderline kind of echoes the Bank of Japan, which is even weirder. But it's just all of this stuff. So that's where I think our shift, our lows, our highs, or whatever. When Powell changes his language, other major governments change their language, then I think it's game time. Other than that, though, that's what I call the holding pattern. The frog doesn't realize the water is boiling if you slowly turn up the heat. Yeah, it's funny though. Last time I said that, because that's like my favorite vacation Bible school example. But then all the non-vacation Bible schoolers, yeah, look at, they already hit the chat. They said that's not true, sir. They said that child is completely incorrect. I know. But that's where I was.
That child is completely incorrect.
It's like, are we waiting for something to happen, or is it happening right now? So that's the boiling water effect. That's what I was saying on the watch list with the bond yields. Because, it's like, are we waiting for yields to break out? And, are we waiting for what's going to happen? No. We already know what's happening. The rates are breaking. You see what I'm saying? So that's why it's like, it's happening, and which is, what are we going to react to, though? And so it's very it's confusing, but it's also, I hope it does make sense. It's like, it's happening now. So it's not like we're waiting for something to happen, but what is happening is occurring, but we don't know the consequence of it just yet. So that's where I think it gets weird. DK, wasn't it just stuck at 1430 yesterday? Will be Japan's monetary policy shift. Oh, I wish it was that simple now, but now my eyes are on France, Germany, Italy, the UK, the ECB, then now China, deflation. It's crazy. They're all breaking right now. It's like, but they haven't broke yet. In a weird way, I'm shocked, but not really. It's just, this is what I was saying with the whole banking crisis stuff. But do you guys realize what happened in the last 24 hours? Can I just tell you one thing that occurred? It's ridiculous. It's absolutely ridiculous. You know about it. We've been talking about it. Just 24 hours, something has happened. Very, very big. I'm gonna need some likes for this. Here's my tip. If you want, I need 1,000. You guys are 150 shy. Let's go. I need 150. This is good. Trust me. Trust me, bro. That's it. Hit the like button. There you go. 20 more likes, I think. Oh my gosh, you guys are ready. So I'm talking about. Yeah, there you go. God bless y'all. You know what's up. Italy. So here's my tinfoil. It's not even tinfoil. It's just, if I was writing a book, this is what I would say. Straight up, bro. Italy, they just pulled off some Liz Truss shit. That's why I said trust me. No, this is some Liz Truss bullshit. How do you go from announcing a windfall tax of 40% at a cabinet meeting with no voting, no discussion, no nothing, wake up, fucking drop it on the market, and then the next day you come back and you try to backtrack it? That's exactly what Liz Truss did, and that blew up the UK gilts. Now, granted, I think they had a different scenario, but it's not as if Italy is it's not like they're doing it's really good right now. So, and then again, I think, and then they have, the Meloni's, she's somewhat new. She's the first, the first women prime minister of Italy. But all of it is just dude, this is some Liz Truss. That's what it reminds me of, to go forward on huge unplanned actions and then a backtrack the next day. It's like they're trying to figure out this shit right now. would a windfall tax make them bump up our interest? No, it changes incentives. That's all it is. I don't. Isn't it crazy? I could go back to the same discussion I had with you guys a year ago, as we were discussing oil and energy. Remember, I tell you about incentives, right? That's all it is. So some people were trying to unpack that yesterday from the watch list. Like, how does Germany getting rid of government yield lower bond yields? Have you guys thought about that? So like Germany the other day, when they're like, oh, yeah, we're not going to pay interest on these accounts anymore. That lowers the bond yields in Germany in a weird way. The yields ended up going up, but it helps keep them down. Why? Because all that money that can't get interest, the incentive changes. They pull out that money from the bank, and then what do? They buy a bond from the government. So they're buying bond, increasing demand, yield should go lower. So it's just like they're changing the incentives, right? So now Germany's changing the incentive for savers and saying, oh, now you guys more incentive to go buy a bond than keep it in a bank account. And now Italy, what incentive are they changing? They're changing the incentives for the banks on how the banks are holding money to either collect interest or not. Because if you're going to get taxed on your interest, that's going to incentivize and change how I'm going to do business, because I know if I make more than my 5-year average, I'm going to, literally, I'm going to have to pay more. So why wouldn't I get all the way up to my 5-year average, and then we could do other things if that was the case, or you could depreciate something or write it off or do God knows whatever else you want to do. But it's like all of this is just changing incentives. That's why I hate this bullshit. That's the only problem I don't like, is that once incentives keep changing enough, it wreaks havoc on the markets, and then it leaves you with like a form or shadow of what the asset once was. Again, look at oil, look at natural gas. Point example A. So it's just, we'll see. We will see, but it's incentivization changes activity of consumers as well as producers. And that's what in Europe in the last 48 hours, we've ironically watched both get hit from both sides, and it's having somewhat of those effects. Yeah, BKTX is looking good. Again, MPW, we're still up on that. That came down. U.S. crude inventories, 5.851. Estimate was 2.3. Oil might get clapped. But there's more crude oil inventories, 159 versus draw of 1.2 last period. Sony dump. Market's trying to get up here too. Apple's still at the bottom. Microsoft still clapped. Gasoline, draw of 2.6 million. Estimate was draw of 200,000. So gasoline inventories got drawn down more. Inventories were a lot lower. And then crude oil inventories were better. KTX. Thought on AI stock. Just be careful. High play. I mean, we've watched this. I played this trade on IPO actually, back in the day. So it has a lot of hype to it. I've even seen earnings like not really affected. So you just gotta find your balance, my guy. But I wouldn't. It's not really a long term for me. Big drop. Check the 10-year. BNTC resumed trading. Yeah, yen's flushing down another quarter. Actually, this is a break 69831. That's the breakdown point. So it's about to be at the low. You're gonna bounce off that or die. Again, even Ueda. He was saying stuff about the currency though. Even if the fundamentals stay good, like Amazon, you think these broader headwinds for the overall economy will bring them back down to 2022 levels? What I think is that if the Federal Reserve and central banks around the world, if they have to shift tone, that means their plan failed. So if those plans do fail, again, if the yield curve uninverts and requires with Powell having to stimulate the economy once again, I do think those broader headwinds will affect those companies and bring down their valuation substantially. Yeah, 100%. But again, it depends on how it happens. So it's not like, I don't think there's an instance where Powell changes his tone and the economy is perfect. Again, Powell changing his tone is accompanied by spurring demand. And at that point, I think the economy would need that spur, and then any of those other guys would not do as well. PG on the high. They're kind of breaking out. They're at 0.4. T-Mobile going up, and Coca-Cola. A couple value plays doing good. Dow's green now. SPY's only down 0.09, and then NASDAQ down 0.51. Everyone wants 22 levels. We're not getting 22 levels. Powell, bro. Just telling you, Powell. Follow the language and the Dove Hawkman. Just open long term. Coca-Cola first buy. Well, I'm glad you went with something, man, that is not juiced up with premium. I'm very proud of you. So good luck and congratulations. Your future self thanks you. I'm still in that one, so we get crazy oil moves. I think this guy might come back for us. So we still got our oil hype. UWM, did they come out? I don't know. UWMC, they've done a lot better than I've expected, but as a question of them taking market share, honestly, in a weird way, I kind of think they're good. I'm surprised. I mean, they could have gotten a lot worse, but I'll take a look at their earnings and give you a better feedback on that. And they just got unhalted, right? Then SPY going down, Tesla dumping, AI, yeah, Palantir's down 6 at 16. CVS is on the high. Interesting. And then Walgreens even going up. Palantir is flushing. Yeah, Rite Aid even going down now, though. Bank of America on the high. Yo, that's weird. Bro, the push and pull is actually crazy today. So it's like, it's not even that bad. Again, watch the bonds. We're getting back down to that one level. You got a couple of these hype names flushing, but yeah, the oil stuff, that had some effect. But it's like, dude, there's like real push and pull now. Even with Disney After Hours and Baba, but we need something to really, really shift. But we're holding this level still. We were here towards the end of the day yesterday, but like I'm saying, you're getting some things pulling up now, or not dying as much as you're getting the other reversals. BNGO After Hours. I don't have Baba shares, no. I don't even have anything in the long term. I'm out of Baba. I might be down to play it after, but like I'm saying, Baba's earnings are tomorrow morning. So if you are going to hold the shares of Baba, just know that you are playing the earnings. So that's the only thing. MOS? I was just looking at, what's it called? At Wheat. You got a couple of headlines here and there. December Babas? I don't think so. What December Babas? Are they like, oh, the random play? Yeah. I still have that one. That's the random play. I was like, what December Babas? Baba will be splitting up. They're supposed to split into a couple different companies. Like I'm saying, I just don't want to take the earnings risk. I had 300 shares. I was up $3,000 on them. Yeah, we still took like 1.1 on it, but it was just. It just still, Yeah, buy them in at 93, no. But I didn't want to take that big of a risk in a BABA for earnings. So afterwards, we had a good game. We could have made a lot more on it, but play worked, still successful. All the China plays, again, besides the Yangs we're down on, we've gotten good hits on China this year, believe it or not. I have a question about the SPY TLT statistic you pulled up of no negative or positive over the last 12 months the other day. Sure. We're going to go over it in a little bit because Slade sent me another one. And I like it too. And again, I gave some of y'all shit for just like, you guys were just like being rude. And that's what I was saying, like, why are you being so rude? But this is just y'all sending me stuff. So if you guys ever, if you take the time to put together a piece of work where you are giving me data, you're coming up with a theory, and like, I will gladly read it. And I would love to share it with other Chads. I'm even thinking I'll even give you guys a segment where we get some Chads producing some analyst research. But the idea is, it's nothing is meant to be claimed as if it's expert this or that. And then again, I mean, you go on TV, you'll hear a lot of quote unquote experts go backtrack their calls and see how they perform too. Again, like I showed you a year ago, most analysts were wrong. But at the end of the day, I love opinions, and I think the chat has some good ideas. So, you can always shoot something my way. Or just I don't know, whether you're listening to what I'm saying or just, again, like if you have your own theory, 10 would count, but make it good. Like, you know what I'm saying? Like, that's all. Like, it doesn't, like, it's kind of like when I tell you I have 10, but it's not 10. Like have evidence, have a reasoning. Again, like if you send me something with like logic and an explanation, and you have data accompanying it, it's really cool. Nvidia not that bad, but this is that price. Someone asked me the hype price to go in on it. I like 430 better than not, but it's kind of like Apple again. Like my Apple play when I'm still in, that was like buying out the previous high. That'd be the same thing with Nvidia here. We went over it, I think Monday. Yeah, like 2 days ago, or it was last Friday. But he sent me another one, so I'm gonna go over it with you guys today. But it's funny because he sent me another one, and I already have something about it that reminded me. But we'll give it a second. We'll see when he's here too. I saw him in here earlier. And Nvidia keeps going down. Apple at the bottom now. I like Roblox, and again for the long term, but I think you could get a better deal on something else. So it's like if you have to take Roblox, I don't think this price is bad. But the way I'm looking at it is just like, I think let Roblo go to like 27, 23 if it gets ugly. But then like, let's see where everything else is at if it does that. So if you give it a little bit more time, Roblox is cheap now, but we may find a better deal. No, I like Roblo. I'm just saying, again, the thing I've been promoting is patience. I don't want you to be timid, but it's also like just be patient with your long term, especially if you have money getting cash return on yield. You know what I'm saying? And it's just like, if you're already fully invested, if you already got a couple of the pickups, dude, let the fuckers run for everything they want. But like, you could be strategic, solid, hold your positioning, defend yourself. And it's just like, you don't need to push it too much. So like I'm saying, if you need to get it, go grab it. It's a cheaper price. It's near some of the lows. I do think there is some more downside, but more upside than downside. However, I also think by the time it reaches the good price, we might be able to get off some, some really, really good things. You know what I'm saying? PG Vertical, Disney. Wow, Disney just chilling. Yeah, PG was going nuts earlier. And then you're buying with margin of safety paid off on PayPal? What do you mean? Are you talking about Roblo? But it's the same logic, again, just like if we get it at a good enough price, we can protect ourselves. Lyft's got one. We're break even on Lyft now. Dude, Lyft was up. Do you not realize how we played that yesterday? That was insane. Bro, Lyft was literally up 20%. And then it came down -6. So we got out on the first 6-7% pop. And then we rebought back in here. But it's like, dude, they're still down 2% on that. They were up 10, 20% yesterday. Yeah, being patient with PayPal.
Damn, Nvidia.
Yeah. So I think do that with a lot of names, but anything, just be patient. You don't, regardless of the specific play, I hope you guys adopt the mindset where it's like, dude, if you are almost fully invested, you got a little bit of cash, if you're not getting like fire deals right now, dude, no, you do not have to move. Do not let anybody make you move and reposition and be in a bad situation if you don't have to. So that's where I'm just saying, like, yeah, there's going to be plays out here, and some are starting to show up, but remember, you got to build up a little cash and you're getting paid for it, but you don't got to force it. It will arrive, and that's why it's like we're kind of moving in that direction. In worst case, you should be able to benefit no matter what. Even if you miss it, you shouldn't miss out on too much. I think, Disney is like, I don't know, that's last chance, but I think this is the price we have it in our long term, give or take, or like $1 lower. But Disney earnings is going to be big, but if Disney fails, that's it. There it is, lift now on the breakout. I think we are back in the green, so that play is working. After 80, it's like 80 and then like $70, I believe. Big levels. So you have like $82, then you have like 77 realistically, 79, 76 down to 77, then 75, and then 66 to 59. Because you're gonna go right back all through here. Maybe it gets more violent. Name the green name, shop down 0.7. You want green names? Lyft, Caesars, where was it? Celsius, my favorite. Even MPW is in the green right now. Amazon, Coca-Cola, a lot of value plays. Or not Amazon, Walmart, Coca-Cola. I think Abivi. Yeah, Abivi's even running right now to the highs. Like XLP and not. I'll give you a breakdown. Oh, Bros, yeah, they killed it. So 194 names red on the S&P, 306 names are in the green. Dow Jones 11 red, 19 green, and then NASDAQ 100, 51 red, 49 green. Recommend Disney earnings for my first trader with you? Oh, fuck no. So that ironically, earnings plays are extremely risky. So actually, I got out of my Disney play yesterday. So we were playing Disney earnings about 2 weeks ago by playing it at the bottom and like playing the run up and selling out. I even sold out a little early, but no, I would not do that. You might be able to find a cheap play and get lucky on Disney, but it's not like if you are trying to find your first trade and make it, I love earnings plays, believe me, but just the prevailing notion is that they are just wicked gamble, more, tantamount to a roulette table. So be careful on that. But Disney, there's definitely a lot of eyes on it, and that is a value play that I have in my long term. So I bought Disney for the long term, besides any earnings trade or anything like that. Disney comes out after the bell. So there's no earnings yet until after. And then bonds, so we're right back down to the Reuters survey point. Like I was telling you, market didn't do anything, but just neither are the bonds. Bonds are still stable though, even if it holds, as long as it doesn't flush, still a zero. The Teamsters Amazon strike extends to Central Valley Warehouse. PayPal is in the long term as well. Yeah, and believe it or not, we're actually up on it or break even right here. So that's what I've been telling people. So I think I'm down 20 cents on it. But we bought it after they failed earnings, and then they kept plummeting. And I waited and I bought it around like $62. I think I was right here. So then it ran up, and like I was telling you, never buy the plays when they go up. It cushioned us. So that's what I'm saying with like Roblo, all these other ones. Let's give it a little bit of time. If it produces extreme value, we'll take it. But like, I don't think you are incentivized to buy anything right now if you don't have to. That's what I'm saying. Unless you really could justify it, I am more incentivized to hold and wait now, especially as the past shows us that our strategy is working very well. Where it's just like, yeah, if you strike at the right time and get a good price when no one wants it, you're gonna get cushion. But then at the same time, you have to have the discipline to not FOMO into it. And then if it does come back, it's gonna come back to your price. So just balance it out. Would I add PayPal if I didn't have it? So like I say, I wouldn't buy any cult play higher than what we paid for it. That's been our strategy. I've been telling you that from the beginning of the year, and I think it works very, very well. Just go for the ones that are cheaper. Do not pay premium. I'm going to turn you into my father. You know that? I want you guys to become Middle Easterns like me and my whole family, and I want you to become cheap. Okay? I need you to reject all premium. Okay? That's it. I want you to accept the Lord and reject the devil, but at the end of the day, let's start with premium. I just need you to reject the premium. Do you understand? That is what will save your life in the next couple of years. Is if you could look at something and say, wow, that's a lot more expensive than last year, I am not going to buy it. That is the only way you are going to survive. Why? Because the expensive shit is expensive. It's only expensive when it's expensive. PayPal is only expensive when it's at $70 after being $60 the week before. That's expensive. When it's at $60 and it was at $70 last year, that's cheap. So avoid all premium. I don't care. You like my play, you like someone else's play, great, follow it. But don't buy it when it's substantially higher than where other people have bought it. Or again, if you have a good reference, whether it's me or somebody else or anything, just do not buy that premium. What about real estate? Same exact logic. I was telling you that for 2 years. But yeah, same exact thing. Rebuke the premium, 100%. Apple flush. So Lyft is up. Apple flushed. Nvidia at the low 2. Nasdaq down 0.6. We talking Redfin. There's a lot. I mean, again, just quite frankly, I have at least every single play in the long term is up, except for a couple of them, and even then they ran. But what happened just a month ago? This was just 30 days ago. What happened? Everybody wanted to buy PayPal at 70, not at 62. Everybody wanted 3M at $113, not at 107 or 103. And so again, every play went up. Redfin, Meta, JP Morgan, Uber is up 50%. Like, even Airbnb, our last purchase was $125 in May of 2022. It's like those plays all went up. I'm not buying them higher than that. I don't think you should. And that's what I'm saying. Just reject all of that. It's okay. You're like, oh, I'm missing out. No, you're not. Because if it comes back down, you're good. And if you do miss out, you find the value that you're not missing out on now. So it's just like, please reject the premium. And you will all build up beautiful portfolios. And then it's not. And as you are waiting and as you are patient, you are incentivized to make 5% on your cash, my brother. Oh my goodness. The price doesn't equate to the company. I agree with you, but I just don't think there's a lot of people right now who are at the skill level of valuing these companies. So the best thing you could do to protect yourself if you are not buying off of real conviction and knowledge that you know in that 10-year plan, the number one thing you can avoid is paying the premium. And that right there will save your life, whether you are sophisticated or an unsophisticated investor. Yeah, Apple's flushing, and now we got the market. You're back to yesterday's level, so I hope you guys see it visually. Just right here, 44.83. That's probably going to be your line in the sand, danger zone. So if we bounce off here, I think we're good. If we flush, you're going to kind of deal with some of the effery of yesterday. Whew. 3 more candles, bro. Alright, you remember that box play? It's a stupid flip. I lost 130 bucks. I'm closing that out. Go the same way every day. Well, here's the best thing. If you want to move it forward, ask me something to move it forward. That's why I've been so thankful for the people with great questions and following it up. So that's the beauty. Take the conversation wherever you'd like. It just requires a good qualified question. So again, I mean, people are asking me certain stuff. I'm making sure that they're not going to get hurt off of that. Ask good questions. Yeah, amen. Amen. Again, sold out of the, what's it called? That was box. The video dying. We choose the lesson. Amen. Amen, baby. Amen. Amen. I still have my Origin, bro. Dude, I'm down $8 on that Origin play. I'm not mad. You know that? Was I up on it? Because I'm not mad at Origin, bro. Low key, J-Alt, it's been sounding resilient. You got in the video 2 months ago. At 427, now you're break even. Oh, okay, you held it that whole time? Or is that long term or what? But either Nvidia is gonna keep bouncing around. You go over. Oh, didn't they already report? And then didn't they issue shares? We could maybe talk about it a little bit because I think we're only gonna have Disney report and then that's it. Oh wow, 5 handle on O is actually not bad. I think we got in at 56, but that could be decent. SPY is coming down now. Even more, like I said, I'd watch that danger level from yesterday, 44.83. You're at 44.87 right now. Does anything look like a couple percent overnight pick? Is that an okay question? I mean, watch what I play and what I'm willing to hold, but I just, again, for your own success, I would encourage you to get away from the time frame. So like, fuck the end of the day, fuck big movement, you know what I'm saying? It's just like, if you can get a good play in a mover, that's all I want. I just want dollars. I want dollars that will make me profitable. If we could do that, you'll win. Yeah, bro. The yen is just clobbering, huh? Bro, yen might break down. That's it. Yen's at 7 flat. This is it. You still got 1/4%. There's still like 1/4% though. He's like, bro, this thing's up, down, up, down, up, down. So wait though, if it does crack there, what I'm referring to is right here. Just if we break down through here, you'll get like another level to like the lower 6.9s. It could still hold, but then this is like the real danger zone, 690. You flush, but then we should hear from the fucking Bank of Japan. I don't think they're gonna let it die too much. If ISO goes down, the dollar is good. Kind of. It just depends. It depends what happens with China and then everybody else. But theoretically, yeah. Natural gas is very sneaky. It's up 44% in Europe today. The biggest jump since 2022. And then we're still going down here. Nvidia, Duke Energy is on the high. I think all the energy plays are still going up there. Amazon's coming down. Another one. Another low. Smuckers. A lot of value plays. General Mills, Ulta, Clorox. Those are on the high. And then on the low ticker again, a lot of tech. NASDAQ down 0.9. Dow is barely red. And S&P is down by 1/3. So honestly, it could be a lot worse. 44.83 here now, so get ready. You're about to face the level, my brother. There's Disney. BKTX break even. MP Dubs. What's the other one? Lyft. Lyft keeps going, so that's nice for now. Why is it going down? Is there any big events? There was more bad China data, but we took China bad as good. And then there was the Italy stuff, but I still think this is borderline the same scenario. I mean, oh, Oracle flushing. Whoa, 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 whoa. Oracle, Oracle, Oracle. Yo, is there anything on this? Check Oracle right now. That thing's dying. 2.5%. It's 1% on this candle. It's already down there. Yeah, Oracle is getting smashed. EIN software market to witness growth. That was 10 minutes ago. 3M Health, Dell, Oracle. There's something. Healthcare information. I see one thing there. Oracle to deliver OCI compute service anywhere with cloud customer Wednesday. Oracle packages applications and middleware for on-premises consumption. I don't know if that's it, but there it is. Just AI all dumping. It could be, but that looks very big volume and candle-wise. Maybe check though. Check like Adobe, NVIDIA, Microsoft. Yeah, they all kind of do look like that. Low-key. Broadcom. Remember SMCI. Maybe that's the silent AI killer that nobody realized today. That the silent AI killer might have been SMCI not living up to hype. But Oracle is dying right now. Meta's on the low. CRM, any of these software plays are just, dude, they're pointing straight down. Yeah, SMCI didn't do that bad, but that's what I'm saying. It's just like they didn't guide with the AI hype. So maybe that's the silent killer where it's, again, I don't think anybody guided up on AI. Anybody who had any remote affiliation to AI, whether we knew it directly or indirectly, they haven't guided up. Again, maybe except Microsoft and Amazon. But then again, I don't think that changes what NVIDIA is going to say. But we'll find out. So SMCI off the bottom right now. Dude, Oracle's plunging. Even more volume. It's not both ways. You have names holding up. The NASDAQ down 1% right now, and the Dow Jones is barely down a tenth. And you have energy just killing it. So keep that in mind. AMD, Google, Tesla. Okay, bigger candles now on everything. So Apple's kind of holding, but they're already down 1%. Again, they were up almost 1% in the morning. Back to 44.84, a little bit higher than the level. Bill and Melinda Gates each project recipient to reach 100,000. They select nearly 50 projects that will contribute to shaping equitable access to AI. They're giving $5 million in grants, 5 times more than we gave Niger as a country. They're giving that to kids for AI. Yeah, thanks, Bill. Appreciate it, Bill. All your help for the world, Bill. That's it, man.
So you think you know Wix? Do you really? First up, we've got shape video masks. You can use different shapes to create completely different vibes and aesthetics. Or you can create your own graphic. I use the shape composition here. Just import any SVG file and set it as a shape mask. Nice.
Nope.
Have a decent move ahead of it. Can I pull up my levels? I got you, bro. 44.83, 44.71. There's like baby levels, like yesterday, 44.80. That was a baby level. I don't think it applies here today, but you never know. Russian central bank decides not to carry out FX purchases from August 10th until year end. But then 44.70 and then 44.53. And then after that, and then the latest low, 44.64. It's kind of a baby level as well too. UAL on the low. You can't find where the purple comes. There's domestic crude. Includes least condensate estimated during combination of short-term forecasts. I didn't call me crass, but probably illegal oil. Like, I don't know. Maybe it's they couldn't track it back, or maybe it tracks back to Russia or China somehow, and then they just put it on a different boat, and now they can't use that boat. But then they're like, oh man, it's just we just got this 2 million barrels here. That's flush on the Qs. Green shoots. Celsius. Very good for them, bro. I like these companies, bro. I don't know. This is how you know I'm an early tech investor. But like I love, dude. I mean, like, who was the other one? Elf, Celsius. Any of these companies doing over 100% of sales in this environment, I love you. I think you're great. I think that is an amazing individual right there. If you are now and still in this environment, doubling up your revenue and more, that's like the growth stuff you want to see, man. And like that's like where I get excited about it. It sucks because these are the names that have too much premium, so I never buy them. But I'm like, dude, Celsius, I've been talking about it all day. So that one's making money. Let's wait till Origin hits. I hope so. If that does happen, I would get so happy by it. Because again, I really respect growth. That we're like, 100% year-over-year revenue. That's what growth should sound like. So I love to see that at some of these scales. But Celsius is breaking out. You might like Cocoa. I don't fuck with Cocoa though. Like Vita Coco, I hate it. I used to like it back in the day, like in 2010 when coconut water first came out. I'm sure it existed before then, but I feel like it was just released in 2010. But like I only like the chocolate. The Vita Coco, I only like the chocolate one, but then after that, I got over it. So I'm drinking more Celsius in my life than Vita Coco. Dual, yeah, are they growing 100%? I think they might be. They have great marketing. And then Spy a little off the bottom. Note is down 20. But revenue increases is pointless because expenses can double. It is, and that's definitely something you got to watch for. In this case, I don't think these companies are, but even then, even in this environment, there's not people who could still go up 100%, even if they doubled up expenses. You see what I'm saying? So even if you doubled up the expenses of Facebook and Amazon, or again, maybe Snapchat, I don't know if you could double up their revenue.
Okay. Closing the broadcast today. I'm currently up 53 basis points, and the S&P is down 27. So, still a good day. I'm off of my highs of like close to 90 basis points. But all right. Mostly in cash. Biggest position is Nvidia, just because I'm a brokey. True biggest position is Purple, PRPL. That's because they report earnings tonight or tomorrow.